Welcome to Wall Street Wednesday. I'm Professor Milligan. Today is June 9th, 2021, and I'm back from my vacation and break. I'm going to give a few minutes to give people a chance to join in, those who want to join in. Let's see. All right. So, hey, Twin, what's going on? Welcome, guys. Welcome. I forgot my disclaimer. Again, these are my thoughts and my opinions. If you find any or hear any ideas that you like, I highly recommend that you speak to your financial advisor before making any trades or transactions. Thank you, Twin. I'm not going to tell my age, but you know my age. For those who don't know, when I say hello to Twin and I went to college together. So that's what's going on. So I know Twin knows my age. All right, welcome. So I'm going to give people just a minute or two to join in. If you guys have any questions or any stocks you want me to look at, don't forget to put it into the chat box. One of the things I will talk about now, which somebody hit me up in my message, and that was that the Fed has stopped. The Fed said they were going to stop buying corporate bonds. And his question was, what effect does that have on the stock market? Yep, go Gators. For those who don't know, I was a Gator for several years. You know, it's the saying, once a Gator, always a Gator, right? All right, so the Fed said they're going to stop buying back corporate bonds. Let me give you the overall big picture. When the Fed is buying securities, any type of securities, they're pulling the securities out of the market and they're infusing cash into the market. So when the Fed stopped buying corporate bonds, in essence, they stopped putting money into the marketplace through corporate bonds. The second thing about corporate bonds is, what's up, Pam? Second thing about corporate bonds is, as the Fed was buying corporate bonds, they were pushing up the price of corporate bonds, which were pushing yields down. Again, inverse relationship between bond prices and yields. So as the Fed started to buy corporate bonds, they were buying them. They were buying, pushing up the price, pushing down the yields. Now that the Fed stopped buying corporate bonds, one, yields on corporate bonds should start to go back up, one. Two, the Fed is putting less cash into the system, which in essence, now it's not a major thing because the Fed's major tool is not corporate bonds, but it is something that actually could lead to higher interest rates. But it's a bigger picture thing. All right, so let's see what's going on. All right, I got a couple people here. It's been a few minutes, so let me get started. First and foremost, let me get this out the way. On the commodity side right now, there are two commodities that have actually started to break down. I highly recommend. Again, my lawyer would get mad at me, so let me say this. I think that they're shorts. I think that these are commodities that you can go short right now, make money to the downside. So let me run through them. First one is coffee. All right, coffee. The commitment to trade report's giving me a sell signal on coffee. Coffee's broke down below its 10-day moving average. For me, that's the signal to go ahead and start shorting coffee. The other two are currencies: the Canadian dollar and the British pound. Very interesting. They're both below their 10-day moving average. The commitment to trade is giving them strong sells. In other words, the commercials are net short some really large amounts, a number of contracts on the Canadian dollar as well as the British pound. The other thing that's very interesting is both are at the bottom of their trading range. So both of them for the last 2 weeks, 3 weeks have gone through a period of consolidation. The Canadian dollar has been consolidating between 82 cents and 83 cents. And then the British pound has been consolidating between $1.40 and 9/10 of a penny and $1.42. Both are in that narrow trading range. Both have actually moved below. Both are short. So those are the three commodities I have. I didn't see anything on the long side. Corn has started to run again. There was one I looked at that's really running. God, can't remember. I know what it was. Lean hogs. Lean hogs is running. So if you're into lean hogs, now the commitment to trade reports giving me a sell signal on that. But right now, lean hogs are running. The one thing I can tell you about lean hogs, it's a very tight market. For those of you now who understand what a short squeeze is, the lean hogs market has had a number of short squeezes over the years. It's a very thin market, very tight market. So this could be a squeeze. All right. What's up, Gary? I got twin 1 and twin 2, huh? Is that the other twin I got here? Could be. I hope so. All right. Now, cryptocurrencies. I know we haven't talked in a while. I know I pounded you guys about not buying dips. So again, not buying dips. But the cryptocurrencies are in a trading range. The cryptocurrencies are in a trading range. They've got a lot of work to do. So let me give you some numbers here. Bitcoin. As you guys know, Bitcoin dropped down to $32,000 a coin. Right now, you're basically sitting right at support. 32,000, 33,000, 33,500 is support. Resistance is at 40,000. So that's the narrow range it's trading in. Bitcoin has a bunch of work to do. If you're trading the Bitcoins, just know you're in the trading range. Let me see. I read that the crypto market lost $1 trillion in market value. I am not surprised. I'm not surprised. They are coming in. They're getting hammered. Paul, I will look at AMC. Just give me a moment. So I will get to the meme stocks. All right. So that's the deal with Bitcoin. Let's see what else we have here. Let's see. Cardano ADA in a trading range between $1.50 and $1.82. All the cryptos right now are at their second or third level of support. So the good news is, with this, over these last couple of weeks, there's been some consolidation, been narrow trading range, volume's been somewhat light. These are the things you want to see. So it looks like that we found our support levels, we found our base. I would be surprised to see them pull in or go much further from here, believe it or not. I think we've got some nice support. Now, don't get me wrong, negative news comes out, which there's a lot coming out now, positive and negative, but negative news comes out, it could move these things down. Ethereum, trading range between 2420 to be exact, and 2889 in a trading range. All of them in a trading range, which is good. If Ethereum breaks through that 2900 level, you're looking at a trading range between 3200 and 3600. So again, most of these are at their second or third support level. So even when they do break out of that trading range, they're going to move into another trading range. But that's what you want to see. Dogecoin, trading range between 30 cents and 42 cents. As you guys know, Dogecoin, a lot of information's come out on this. You guys realize it's not a legitimate cryptocurrency. There is no stored value. There is no mining, yada, 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 all that. But I know that, what's your boy's name? NBA team. Mark Cuban is actually using Dogecoin for business at the arena, so forth and so on. But again, it's not being accepted by a lot of places. Dogecoin is under a lot of pressure, and as I said, it's back down to that 30 cents to 42 cents trading range. I'm not sure what's going to move Doge back up, other than I guess Elon Musk and some other people going out and saying how much they would buy Dogecoin. All right, the last one is Ripple. Ripple, again, ADA and Ripple actually, Cardano ADA actually has a pretty good looking chart. Ripple, trading range between 79 cents and $1. If it breaks through that resistance at $1, your next trading range is between $1.20 and $1.32. So make sure you understand what I'm saying. If Ripple pushes through that dollar, I would expect it to push all the way through from $1 to $1.20 without basically any hesitation within a day or two. Then when it gets to that $1.20 range, it's going to be in a trading range, a new trading range or older trading range from the past between $1.20 and $1.32. All right. So let's see. I covered everything I wanted to cover on the commodities. I covered my cryptos. I covered the Fed. All right. So looking at my time, wow, I covered a lot in that short period of time. Let me bring up one other thing before I start going into individual stocks. So just let me bring that up. Your IPO stocks. Over the last 2 or 3 days, 4 days, the cloud-based funding, the digital currency companies have all done well. They've moved up. They're trading well. You'll also see that move into some of the other stocks like Upstart and AIC3. So they're trading really relatively well. They're still not pushing through to their highs. Now, the one benefit we've seen is a couple of companies have gone public over the last 2 or 3 days, and they didn't sell off. They actually traded higher and traded sideways. So we're starting to see the IPO market maybe gain some footing. That could be key. All right, let's see what this is. Somebody just wrote, what is your opinion about Portland allowing Dogecoin as a form of payment for condos? All right, guys, let me say this and say this to you guys again. I think any business right now that's accepting cryptocurrency as a form of payment is out of their mind. And the reason being is, I'm going to use this, the Portland condos. If I'm the corporation, the business in Portland that's building and selling condos, my business is building and selling condos, not speculating on cryptocurrencies. Now, the reason why I say that is, and I'm going to use American dollars. Let's say Bitcoin, bear with me a second, just bear with me 1 second. Let me pull up Bitcoin. I just want to see where it's currently trading at. All right, Bitcoin closed at 34,000. Let's say my condo costs 3 Bitcoins. So that's what, about, you got 34,000. What's that, about 100 and 112? My math, 110, 112, whatever the case may be. But we're buying it for that dollar amount. So we're buying that. So I paid 3 cryptocurrencies for it. All right. Now I'm the business. I got paid 3 cryptocurrencies for you to buy my condo. Between the time I got those currencies and before I could convert it to cash, let's just say that cryptocurrencies dropped to the bottom of the trading range and dropped down to about 30,000, which means I lost about 4,000 on 3. So I lost $12,000 on this trade, all because of the volatility in the cryptocurrency. I hope this is making sense to you guys. Now, as I was saying, the only way I can see this making sense from a business standpoint is if you took those cryptocurrencies in, any of them, not just Dogecoin, but any of them, and converted them to cash immediately. By converting them to cash immediately, I've taken out the risk of the currency fluctuation. Anybody who's ever been in class with me, my 342 class, my Finance 342 class, where we talk about markets, has heard me talk about the volatility in the currencies and how you have to hedge currencies now. How Toyota sells cars in the US but wants to move the cash back to Japan, move it back to yen so they can convert the dollars to yen. And we all know that if the yen actually appreciates against the dollar when you go in to convert your dollars to yen, you're going to lose purchasing power. All right? Cryptocurrencies work the same way, but except for they're more volatile. So again, if I'm a business person and I decide I'm taking these cryptocurrencies, I'm converting them to cash immediately, and or I'm hiring a whole team that's going to actually go into the futures market. As you know, there's futures on Bitcoin, and I'm hedging those transactions. I'm literally reducing the risk. All right, sounds good in theory, but it's going to take a long time before these cryptos actually stabilize and can be used as an actual currency. Right now, they're more of a speculative investment. All right. So that was that about the cryptocurrencies and what I think. I think that, and I've had this discussion before, I think any business that's the size except cryptocurrency, it's more political and a media statement than actuality. Boo. Actuality. No, that's wrong. Bad grammar. God, no wonder I'm a finance professor in finance instead of English and grammar. But anyway, you get what I'm saying with this. Too volatile. Now, let me move back to the meme stocks. I know you guys want to ask me about AMC. I looked at the chart at AMC earlier. I'm looking at it again right now. Bear with me a second. And the one thing I can tell you is this. When AMC started to break out, let me give you some numbers. When AMC started to break out, I'm looking at this day right here, the first breakout, the stock went from a low of 13 and change to a high of 16 and change. So basically you had a 3-point move in a $13 stock, and the volume went from 142 million shares to 213. That was your first time you got a little look at it. The next day didn't have as quite a big a move, but the other thing that happened was, look at the volume. The volume went from an average of 174 million. Now understand, I'm using a 20-day moving average, which basically is 20 days in a month. So I'm looking at the volume for the last month, trailing month, and then the volume on that day was 370, almost 400,000. So we had the double average daily volume. Stock didn't move that much, but make sure we understand what's going on here. The people who are putting these memes together, that are putting out there that these stocks let's run these stocks, let's push the stock, let's do this, let's do that. Let me make sure you understand what I'm about to say. If you're going to put out their recommendation or try and push a stock, what they're doing is they're taking a position before they make their announcement. Let me say it again. Here's how these guys are playing the game. They're taking a position in the stock before they start touting the stock. All right? And whether it's the meme guys on Reddit or whether it's some hedge fund, they're taking their positions before the news comes out. And what shows on that is volume. Again, if you guys want to track anything, you can track the meme guys, track the volume on those stocks. The Clovis Health, the AMC, the GM, GameStop. I know I'm missing some others. There's several of them. But track the volume. The key to all this is always going to be the volume to the upside. All right? When you see heavy volume, and understand, the volume doubled. The volume doubled. The volume doubled before the big move came. You had a move of, like I said, from 13 to 16. The next day you had a move from 17.5 to 19.5. And then from there, it went from 19.5 to basically 27, almost 30. And that's when the pushes started to come off of the volume. All right. So GameStop, hard to read the chart. Right now it's forming a pendant flag. A pendant flag is neither bullish nor bearish. It typically is going to break out. Now, when it does break out of a pendant flag, it's going to be volatile. And what I mean by that, it's going to break either high or break either low. In my active trading days, when I used to trade options on stuff like this, when I saw a flag like this, I would actually buy a call and buy a put. Buy a collar. The volatility is going to be enough there to push this. Now, I just saw GameStop earnings came out, I think. I'll go check that in a minute. Bear with me a second. I apologize for being interrupted, but I think GameStop's earnings just came out. I'm looking for it now. Let's see. GameStop shares move lower following Q1 results. That was today. So they did come out. Let's see. Estimate was for 45 cents loss, and they had an 83-cent loss. I think that's what this is saying. They lost $1.01 per share. All right. I'm not sure what the stock is now. I'm going to pull up a chart on it and see what it's doing. So let's see. Post-market, it's down 54 cents. But again, I don't think anyone's trading GameStop based upon the news of earnings. All right, let me move on. So that was AMC I just looked at. I have someone here asking me about GameStop and Coinbase. All right, GameCoin. GameStop introducing GameCoin. Yeah. Somebody else introducing a cryptocurrency. Doesn't interest me in that respect. It's probably going to be volatile, but doesn't interest me. Well, the reason why it doesn't interest me, I have no interest in underlying business. I have no interest in GameStop as a stock, so there's no interest in GameStop as a cryptocurrency. Excuse me so much. I apologize for that. All right, let me see what else Andy Cornfield, what's going on? All right, so I had that. Excuse me. GameStop. I'm just pulling up the chart on GameStop. Again, same thing. The thing with both these stocks is when you look at GameStop and everything else, you want to track the upside volume. You just want to track upside volume. And you can see again, GameStop's uptick. So let's see, GameStop volume. Let's see, GameStop. So on May 25th, GameStop volume was 6 million shares, and that day it traded 14 million shares, and the stock was up 29 points. That was the first big move, and then it just ramped up and followed from that, and volume just followed. Again, guys, I'm not trying to be redundant. You got to track the volume on these bad boys. If you're trading these meme stocks, one of the keys for you in terms of when to get in and when to get out is volume. You just got to track the volume. What's the other one that ran? Clover Health. Clover Health did not give you as big a warning, but it did give you a big warning. Again, another case, and this is crazy. June 7th. June 7th volume, average daily volume was 29 million shares. On that day, Clover traded 125 million shares. All right. So we're talking about, what is that, 6 times? 7 times? Oh, 8 times, right? 8, a little over, what? My math is wrong. My bad. But anyway, 3 times, 4 times over the average daily volume. And then the next day it followed, if it had that gap from 12, opened up at 16, 17, and ran up to 24. So there it is. Now, it had some volatility and pulled back today. But if you guys are trading these things without using stop loss or anything, you're out of your mind. EPAM, all-time highs. Add to your position. Don't go greedy. Don't double up. Just add to your position. Nibble at it. It's fought its way back. It's trading extremely well. Earnings came out. EPAM. I was looking at it. I literally was looking at it this morning there, Twin. I'm still long too off of earnings from last year. So stay with it. It's trading extremely well. So yeah, I like it a lot. Paul, I did AMC. I guess I'll look at AMC again real quick for Paul. Yeah, man, I'm looking at AMC. Right now, like I said, it has that pendant flag. It can break down. If it does break to the downside, you're probably looking at easily coming down to that low $40 range, high 30 range. And if it breaks to the upside, it should challenge the old high. The challenge you have right now with AMC, Paul, is that it has a pendant flag, which is neither bullish nor bearish, but it is going to break. Those typically are breaks. Let's see what else. Stephen and Richard, do you actually want to get on the show? Or did you hit the wrong button? Let me know. 2 of my former students, I think they hit the wrong button, but we'll see. Let's see what else. Any other ones? Let's see. Anything else? I'm just looking to see if any other stocks are up here. Ham, you did not ask for... Oh, I'll take a look at those. Ham, wrong button. Okay, Steven. Ham, you did not ask for FVRR, so I'm going to do that real quick. FVRR is back in the old trading range. Hold on, let me make this a little smaller. Stock has some volatility. All right, so it's back in the old trading range. Right now, you're at a minor resistance level at 210, around there. When it breaks through this 210, it should actually push up to the $2.40 level, 240. Did really well off of earnings. But again, the tech stocks took a hit. But it is holding up well. Again, Ham, you know what I'm going to say. For me, I'm really interested at 330, 340 is when I get real interested. But we'll see what happens from there. I'm laughing. All right, let me do 2 things. Andy asked me for General Motors. All right, so I'm going to say a couple things here. Bear with me, Andy. I'm just pulling up. I'm almost positive, but I just want to double check. Yep, okay. Well, I'm pretty sure what okay. All right, General Motors right now broke out of an old trading range between 56 and $60, $62. And now you have a very small, light trading range over the last couple of days. Hold on, let me zoom in and I'll explain what I mean by that. The stock's been trading between 62 and 64 and change for the last 5 days. Now, here's what I was going to say about General Motors. If you're a long-term investor and you're willing to buy the stock and hold it, it's probably not a bad trade here. As a trader, though, you're not going to get much run out of General Motors. So what do I mean by that? So let me explain what I mean by that. Let me go to a weekly chart. All right. For this year, the stock basically has run from $44 a share all the way up to $67. So basically a 50% move. General Motors is not the kind of stock that's going to give you that kind of move long term. All right. It's a plotter. So if you're looking to trade it, you might be able to buy it here in the breakout, but I'd look for volume. And I'm not sure when earnings are due. If they already came, they probably came already. Yeah, they came already. And the stock didn't really run off earnings. So again, I'm not sure if I would be aggressively buying the stock looking for a trade. SMH. I'm switching to a weekly. Bear with me a second. All right, another ETF, semiconductor ETF. In a nice little trading range right now between 224 and 260. You know my feelings on ETFs. If you're going to buy an ETF, buy it and hold it. If you're looking to trade an ETF, and I'm looking at the volatility in this thing, it's all over the place the last couple of weeks. Yeah, it's in that range. One of the things I highly recommend is Andy is open up the SMH, look inside and see what the top performing stocks are in the group in that ETF. Those are the ones I would focus on. Those are the ones I would look at. All right, let's see. I'm just reading through. Chantel, Casper. When I saw you type in Casper, I put a smile on my face. The reason why I put a smile on my face is Casper is one of the stocks I recommended to short the day it went public. Bear with me a second. I'm going to a longer chart. I just want to make sure. Yep, that's what I thought. So Casper Sleep went public, I believe, was at $18 or $20 a share. Opened up at 14 and change, and has never been back. It's gone from basically a high of 16, and I'm talking about since the company's been public, and that goes back to February 2020. So stock went public. The highest has been at 16. It's been as low as $4 a share. Again, for those who like I said, I put a major short on this. For anybody that's listened to me, I've been pounding the table in terms of shorting Casper Sleep. And right now, it's got a choppy chart, Chantel. There's a lot of other companies out there that have much more upside potential than Casper Sleep. I would say to you guys, anyone that's looking to trade Casper Sleep, volatile, I would say to you, I would revisit this when it goes through 16. Revisit through 16. It's got plenty of work ahead of it. Let's see what else. All right. I'm going to jump to now, NOW, which is ServiceNow. The reason why I jumped to ServiceNow is it's another stock that I owned and traded for a long time. I traded for a while. I got kicked out of it finally. Stopped out of it, I should say. And here's what's interesting. I'm looking at a weekly chart, and the stock is sitting right at support at 454, in that range. 454 is some major support going back to July of last year. So I would be, if you're looking to buy this, you're at support. It should hold. If it doesn't hold, it could break down. Volume's been light. So that's a weekly chart. Let me switch to a daily chart, see if I can narrow this down a little bit for you even more. NOW. All right, so bear with me a second again. Let me just zoom out. Yeah, ServiceNow's got a lot of work in front of it. Chart is really volatile. As I look at it, I can make an argument that this is a head and shoulder chart. Head and shoulders, and that neckline, that support level is at that 450 level. Where we're at now, this is a major area for it. It's got to hold here. You got to have head and shoulders. For those who don't know technical analysis, head and shoulders is typically a very bearish chart. Yeah. All right, QFIN. Pull it up real quick. So here's a prime example. This QFIN had a lot of volatility in it, had a high of 34, pulled all the way back to 22, traded sideways, and finally worked its way through it. My only problem with this is, and just be careful with this, guys, it shows a lot of volatility in it. So just be nimble with it. I'm looking at the chart. I'm going to zoom in a little bit more. Yeah, I would just be careful with it. I see it ran off of earnings, so earnings must have been good. But when it ran off of earnings, it went parabolic. So basically, when the earnings came out, it ran from basically $29 a share to $39. It has a couple of retracements. I would just be, if you own it, just be careful with it. If you're looking to buy it, it's really extended here over the last couple, extended, and it got extended over again today. So just be careful with it. FRH. I don't know where you guys get these stocks from. FHRC. Don't like the chart. Typical Milligan. And the reason I'm laughing is I don't like the chart on it whatsoever. It's had some it had a nice move. I'm looking at the monthly chart now. So the monthly chart looks really good, but it got extended between 20 and 50. Switching to a weekly chart. All right, so you're in the trading range right now in the stock between FRHC, the Freedom Holding. You're in a trading range between 43, 44, and 60, the old high. It's pushed back up to it's pushing back off that, it bounced off that support level at 45, and it looks like it's trying to advance and challenge that 60 number. If it breaks through 60, it should run. One of the things I'll say to you guys is the longer security trades sideways, which is what this one did. It's been trading sideways now basically since since December. So longer trade sideways, when it does break out, it should give you a nice run. So I would look at this, keep an eye on this. A breakthrough, that 60 number with some volume behind it is a breakout, and I would look to get long. I'm looking now at the daily chart, and my opinion has not changed. All right, now what's the catalyst that's going to make it break through that old high of 60 and keep running? I can't answer that, but I can tell you it's actually near the top of the trading range. You need to see some push now. You need to see the push through 60. All right, checking my time. Okay, I'm in good time. Will the lack of microchips cause major changes in auto stocks, causing higher car prices? That's a great question. I honestly don't know. Now, the short answer is supply and demand. Based upon the fact that there's low supply and there's an increased demand, prices should go up. And if the price of chips go up enough, that should pass on to the price of the car. Now, that's economics 101. That's what should happen. We'll see. But again, that's what should happen. So I am agreeing with you in terms of your long-term analysis that based on the lack of supply of chips, it should cause prices higher. And if prices go higher, most of them are going to pass that on to consumers. All right, what is this? VIAC? Well, Discovery. Discovery Channel is probably one of the most profitable cable. It is the most profitable cable channel out there. Major acquisition. I'm not sure. I can't remember who brought it. God, don't get old, guys. But major acquisition. Great company. One of my former students did a good buy report on it. Looked into it. Really good company. So again, now Viacom. Let's see, Viacom class. Whew. All right. This is Milligan. Viacom back in March was as high as $100 a share. Now the stock, because of what's going on, everything, now the stock's trading down here at $42 a share. Again, for me, I won't touch this kind of stock. Just won't touch it. No interest right now. No interest. All right, let's see what else. Yeah, it says Discovery was acquired by AT&T. Thank you for helping me remember that. All right, let's see what else. BlackRock. So what do I think about BlackRock? Great company. I don't like buying financial stocks. I just don't. So I haven't looked at BlackRock stock in a while. So once again, my prejudice is actually costing money, huh? So I'm looking at the chart. Bear with me 1 second. I just want to go to a monthly chart. I want to go back and look at some time. Yeah. Okay, so I thought. All right. So first and foremost, Gary, long-term chart looks extremely well. So this is the kind of chart I like to see. I move to a weekly chart. And as I look at the weekly chart, interesting. I want to zoom in on the weekly chart. Bear with me a second. I want to get a little more here. All right, you got some minor resistance at the old high, which is right below 900, 890. You got some minor support at 856. When I say minor, really minor. Your next major support level is not showing up until about the 757 level, 758. What's interesting about this is that volume has been relatively low, so it's been creeping up basically off a low volume. Let me go to a daily chart. Yeah, so, yep. All right, so you're in right now in that, well, actually it broke out of that minor range. There was a minor trading range and it broke down. It's at the bottom of that minor trading range. You're at 870. That's right where it's at. So it's in that trading range between 870 and the old high, 888. If it breaks this 870, your next support level is going to come at 858, right around that level, the high 850s. And if it falls in that. What I was saying was that the stock is basically moving and trading higher off a very low volume. In other words, volume is relatively low, average volume. So you're not seeing what I would call a real convincing breakout. Probably not a bad long-term hold. But again, I would just be careful in terms of a short-term trade. The other thing I'll say is, understand, I'm looking at the stock now. I see a move here where the stock ran from 720 to 780. So the stock can give you a 60-point move to the upside. And if it means it can give you 60 points to the upside, it can also give you 60 points to the downside. I'm looking at another move here, another 60-point move. So just be careful with it in that respect. All the moves have basically been to the upside. The sell-offs typically seem to be a lot slower. But yeah, there's some 600. Yeah, 10% move on a $600 stock is 60 points. A 10% move on an $800, a $900 stock is 90 points. So just realize that you're getting some big moves here in terms of what you can see. A 10% move to the downside would be 90 points. All right. Let's see. I'm checking my time. I got more time, so I guess I'll keep going with this. For those who have an interest, Let's see. What do we have here? Budweiser, BUD. Andy, I think you're just pulling any stock that you can find and just pulling and just saying, hey, why not take a look at this? Wow. Barely, I'm going to a monthly chart. All right. So this is for everybody, not just Andy. But Andy's the one that's brought it to my attention. For those of you who've never been around me, I do not like and do not buy or trade stocks that are coming off their all-time lows. The reason why I bring up Budweiser right now, I had a nice move from 60 to 70 to $80 a share, and the all-time high in the stock is 140. And when I look at this chart, I can just see the levels of where they're going to hit resistance and hit selling pressure. For those who don't understand, and I'll explain again, you all have heard these myths, these disclaimers: buy low, sell high. All right. Budweiser is a great company. It was trading at 100. If you liked it at 130, you're going to love it at $70. All right. There's a reason why stock went from $140, $130 a share down to $40 a share in 3 years. Something's going on. This is just not a random market sell-off. So whatever is wrong with the stock that took it from 130 down to $40 a share and bouncing off there, whatever was wrong, is it fixed? Is it over? Then the other thing that you run into is, again, you've heard the comments. I'm just waiting until it gets back to what I paid for it, then I'm going to sell it. It's not a loss unless you sell it. I'm not going to book the loss. I'm just going to hold it. All right? Believe it or not, you might think that those are only retail investors that think that way. I can tell you, I've met institutional traders. I've met portfolio managers that make those same statements. All right? Now understand, with a portfolio manager, they have a lot more cash than you and I, and they've already sold to their customers, their client base, that we're a long-term investor. So we're not buying Budweiser looking for it to rally, to make your money in the next week or 2 weeks. We're buying Budweiser as a stock that we want to own for the next 5, 10 years. It pays a nice dividend, blah, blah, blah. You know the story. You, on the other hand, you're a trader. Now, if you're a long-term holder and you like Budweiser, go for it. If you're a long-term investor and you like companies like Budweiser, what you're looking at is you're a value investor looking for stocks that are out of favor. Go for it. If you're a growth investor, which means you're looking for companies that have expanding growth. Growth is increasing. You're buying it. You're paying a fair price for it today because you expect it to grow in the future. This is not the one to buy. So one of the things I always talk about is understand who you are and what you're trying to accomplish in your investing. If you're a short-term trader, great. Maybe you can trade Budweiser for a nice trade. If you're a long-term investor, great. You can buy Bud. It looks like, again, I don't know the company. I haven't crunched any numbers on it, but it looks like, based upon it's out of favor, it looks like it's probably a value play. Probably pays a high dividend. Know who you are. So with that, Andy, I'm going to say to you, there's nothing for me to tell you on Budweiser other than, and let me come through it. Bear with me a second. The only thing I can tell you on Bud is, really volatile chart. You've got some gaps in here. I'm looking at a daily chart. You got some gaps in here. So it was in a trading range between 74 and 76. It broke out of that. Plenty of gaps in here. I don't know what caused the gaps, but one thing I will tell you guys, typically when stocks have gaps in them, if there's not a good reason for the gap, what I mean, if there's no takeover, if there's no earnings or anything, you just have gaps between buying and selling, they will come back and fill those gaps. So what do I mean by that? I expect, without me even looking at anything, I'm looking at this chart on Bud, I expect Budweiser to come back and fill this gap between 72 and 74. Yep. You got a big 2-point gap in there, and then it consolidated. I expect it to come back and fill that gap. If you look at the chart on Bud, there's a number of gaps in here, and if you look at these gaps, they've come back and filled all the gaps. So again, that's what I see. FTI, another little interesting chart. Bear with me a second. I'm just pulling it up. Again, oh, that's not my chart. Sorry, I hit the wrong, I hit a button, my finger hit a button and pulled up one of my charts. That's the one I'm looking for. Thank you. All right. I'm looking at FTI. So FTI looks like went public back in 2002, based on stock splits and so forth. It went public at around $4 a share, hit a low at $2.40. The reason why I bring that up is back in April 2020, the stock basically tested that IPO opening price at $4. So once again, we have a stock that's been as high as $52 a share back 4 or 5 years ago, and it's done nothing but basically just gone straight south. It's been in a downward trend. Not crazy about it. I would. It's got a lot of work. Again, I'm not trying to get on your portfolio. I don't know I don't know what price you paid, but I will say to you, I want you to think about this for everybody, and this includes Andy. What's the point? What's the path of least resistance for these stocks that you're showing me? And for FTI, the path of least resistance is actually down, not up. And when it goes up, it's going to take a whole bunch of work to get this thing back up to that $52 range. So I want you guys to think about path of least resistance. I'm looking at a daily chart, and guess what I said, the volatility. Oh, Jesus, it's volatile. Volatile with no volume. And I'm looking at earnings. Yeah, I have no opinion on this. Only thing I can say to you is that if you finally do get through this old resistance, this resistance where it's at, I'm just looking. Geez, you stumped me. I'm stumped. I don't even know what to tell you with this. And then Cowen, which is a portfolio manager, brokerage firm. Again, I'm looking nice trading range. I'm just switching to a monthly real quick. Yeah. The one thing I'll say to you about this is I'm not sure what's going on with Cowen, but it's got a lot of work ahead of it. It's kind of trying to fight its way back up. Your old high is back up there in the 80s. And I'm going to make a statement to you. If I were looking to buy a brokerage firm stock, I'm just pulling up the chart, I would say to you, I wouldn't look at Cowen, I look at Goldman Sachs. Don't look at the stock price. It might be $382, a lot more expensive, but one share of Goldman Sachs is going to do a lot better than 100 shares or 1,000 shares of Cowen. Andy, I like that. You say you like the fundamentals, but the chart looks like crap. Buy companies that have both great fundamentals and a great chart. The only way that you can invest, let me say this again. Let me say it again. And Andy, I brought this up. I'm working on this. I did a study years ago. I had a couple of students at the time that helped me. I literally started reviewing it and doing it again because I'm working on a new presentation. I'm working on a new video. What I did was, and you guys can do this, I've talked to you about this before. Go back over the last 10 years and go look at the top performing stocks for 2010, 2011, 2012. Just go back and look at the top performing stocks. Take out the acquisitions, the ones that were actually taken over, that's why the stock ran. And just look at the charts on the other ones. And what you're going to find is the top performing stocks have a very similar chart. Upward, 45-degree angle. That's what they look like. So if I want, now understand what I just said. The best performing charts, all right, They look like this. Yeah, there's some dips and some dabs and all that, but they look like this. So my comment to you is, is your goal to make money in the market, or is your goal trying to find something that no one else has seen that's going to be the turnaround company of the world? My point to you is this. The great companies that actually perform and put money in your pocket, their charts match their performance. Understand this. The only way that smart money can make money is by owning the stock. All right? That's the only way they can make money. So no matter what the fundamentals say, if the chart doesn't confirm it, it means institutions really aren't interested in it. And understand this, other than the meme stocks, institutions move the markets. Now, you saw what happened with the meme stocks, the volatility. So, again, I'm going to say this, and I've said this, and this is going to be my new tagline. You can find a company with great fundamentals by looking at the chart. But you can't look at fundamentals and find a company that has a great chart. All right? When a stock has a good chart, and I'm not saying one that, okay, I'm talking about a really good chart, like I'm looking at Goldman Sachs, the numbers are going to follow it. Go look at any company that's been reporting great numbers. Look at any growth stock that's reporting great numbers and look at the chart. And yet what you'll find is most likely the sell-offs are coming when the market sells off, not because the stock's not doing well. Somebody asked me about EPAM earlier today. I'm pulling up the chart on EPAM. And yeah, I'm looking at this chart. And I would challenge anybody that would say that this stock is not doing well. Now, you want to take out the volatility? I'm switching it to a weekly chart. This is just, like I said, the big sell-off came back in April last year, 2020, like everybody else with the market. From there, it just looks phenomenal. So all I'm saying to you guys is, that's what I would do. Let's see. Cowen's revenue. I'll close that. Oh, come on, don't do that to me. Cowen's revenue increased at the exponential rate. I also own Goldman Sachs for the same reason. All right, so here, another portfolio manager. Sell the dog and buy more. Sell the dog with the fleas and buy more of the superstar. Real simple. Let me put it this way. If the brokerage industry, the investment bank industry is going to do really well and take off, who's going to do better over the long haul? Cowen or Goldman Sachs? You already know the answer. Best of breed. Who's best of breed in that environment? So this is just me. My bet is that Cowen is being dragged along because Goldman Sachs and the other stocks in the group are doing extremely well. But the biggest money maker in that group is always Goldman Sachs. All right, and then we also looked at BlackRock. So I'm not sure if I'd be trading or be on Cowen for that reason. All right, guys, I see I'm almost out of time, so I'm going to hop off here. I appreciate you guys. Have a great, great day. I'm back. I'm a year older. I'm back, and I'm looking forward to it. And you heard me mention, which I'll mention again, literally, as soon as I get off this call, I'm going to post a video, and I've already started recording some new videos. So I have one right now that's being edited by my IT guy. I'm about to record another, and you will see those. I will post those. So once I get them done, you'll start seeing them. With that said, have a great, great day. I appreciate you guys, and I'm going to post this. Milligan is out.